Cool. So we are just about to start our FX trade in 15 minutes challenge. So this is where Andy will look for a low risk, high probability trade by doing his live chart analysis. Today, we're going to look at the Euro Aussie. Is that correct?
Yeah, we're going to take a look at the Euro Aussie on multiple time frames to see where the opportunities are for a potential trade.
And then we could, so we're open to anything, right? It could be a day trade, it could be a swing trade, whatever it could be, or it might be a mixture of both. Like sometimes you come up with a couple of options. So with that being said, let's jump into this trade setup of the week and see what we can find.
Okay, so let me just start from the beginning. A little zoom out. So I'll just clean up a couple of things that are not going to be relevant right now. So let me just share with you guys what I have on my charts. I think that's important. So we have the moving averages here. So we have the red, which is the 50 moving average. We have the green, which is the 200. And I generally like to have them to have a look to see where we are relative to that. And, you know, sometimes we go through periods where the market can kind of just go sideways as well. It doesn't tend to do it too often where the cross happens. You know, generally speaking, the cross happens and the market goes lower. Where these are also very useful is, you know, if you look at the lower time frames, you know, then it can kind of be a bit more dynamic. So you can see here, the market crossed above and then it crossed below. That's kind of a sign of, you know, maybe the market's getting a bit rangy right now when you see that sort of quick cross up and then quick cross down. So what I've done here is I have basically taken this channel support here, and you know I've noticed that the market likes to generally hold on there. Now you might notice like it's not perfectly drawn, and that's not by accident. Like you might see, for example, oh, hold on a minute, the market's going through that. Now that would put a lot of people off, but actually what we're trying to achieve here is to find a line that the market likes to react on. And because sometimes the market's going to break, especially in currency pairs, it's going to break a line and then go back up, go back through it. But what you're looking for is the market reacting there? And you can see, if we just carry on, and there's more weighting, by the way, there's more weight to more recent price action. So the most recent price action here, you can see this line was quite effective. And what I particularly like is that we broke through it, we came back, we tested it, and then the market went lower. So I'm just kind of using that as a parallel. And I quite like that. Here's what happened. So we used this as support. The market actually came back to this level. It did act as support. If we just kind of zoom in right there. Okay. It acted as support. It bounced. And then, as I was saying before, similar to what it did before, if I just show you, remind you, where was it? So it was here. So it went through it, and then we eventually came back and acted as support. We could be looking at something similar on this line that we have here. So let me just get back to where we are. Now, what I really like about this is that the market has basically broken back above this line. It's created this morning star candle formation. I really, you know, I think that the volume is okay. You know, good volume there, lower selling volume. Hasn't quite picked up yet in terms of volume. But I really like the idea of looking for, since the theme is Fibonacci, looking for a Fibonacci pullback to potentially buy, you know, with a potential target, you know, possibly back to this zone here. So that's what we're kind of looking for. We're looking for something that is quite easy to achieve. Now, some people might want to try and get this market to go all the way back up here. So if I just extend this out, like, you know, you could make the case for, hey, you know, this could go back towards the upper part of this channel. And that is true. It could do that. But that's a very, very long way away. And you almost become an investor if that's what you're doing. And things, I mean, you could be stuck in this for such a long time. My preference is, I want to really, if I'm going to take a swing trade, I'm looking for one swing, because this up here will be multiple swings to get to here. I'm looking for one swing. Okay, so basically pull back and then catching the swing and then out. That's pretty much the game plan. So what we want to do is we want to identify some levels that could kind of act as our, you know, against our trade. So if we're buying this, we want to see where are the sellers going to come in. Well, you can see that these zones here are acting as support zones. And so naturally, this should be the upper part of our target, around that 159, approximately. Okay, so what do? Well, we can do this in a couple of ways. We can stick to the daily chart. We can take our Fibonacci tool and we can draw from high to low like that. Okay, and I'm just going to zoom in here. And you can see that this here is, so what we're looking for, this here is our, what's called a super shallow pullback. Okay, we don't want to buy this here. We want to ideally wait for a pullback to at least the first red line, which is the 38.2 Fibonacci retracement. And ideally, it would be great if we can get it at the 50 or even at the 618. So what I was saying before, Gavin, is for most people, if you're going to buy in this kind of zone here, and you can also see, guys, that this is a nice old resistance that becomes support. So if I could give you a textbook trade, it would be, right, let's see if we can get it back to here and then take it up to here, right, which is where the red target would be. So you can see here, guys, it's all color coordinated. It's a red target, and it takes you really, really nicely up to the 200. So ideally, you want to be buying here to target there, and you'd be putting your stop there. That's really a textbook swing trade for something like this. Okay, you give it that room, that breathing room, especially in light of, like, you know, news coming out on Thursday, which can create volatility. And, you know, you come up with a target that is achievable. And you can see there the Fibonacci target is just below this red line. That's what you want to see. You want to be out of this before the sellers get interested. So you could be literally looking to buy this anywhere from here, which is 159.40. The ideal buy zone would be about 154.73, and your stop would be approximately 153.04. Now, what you can also do, so that's one swing setup that is very much playable. If you go over to the 4-hour time frame, you can also look at the 4-hour chart. And what I quite like about this is that it kind of makes it a bit easier to see how the trend, you know, how the buyers are actually starting to take some control back. So if I just bring in my pen that I can easily just erase, let it load up, I'll show you what I mean. So, and this is where price action is kind of like, you can see the markets are generally doing this, right? Like these lower lows, lower highs, lower lows, lower high, lower low. See how the, you know, we break this low here, and then for the first time in this trend, the high gets broken. Right now, so far that's the low that's been created. Now, it could be a case that that is the low and this market's just going to go higher, right? That's possible. And this is where having multiple strategies is, you know, it's not necessarily important, it's not necessary, but it definitely gives you an edge, because, you know, for somebody who wants to be a swing trader and you place your orders, you know, what happens? Sometimes you place your orders, you've done all this great work, and the market just never gets there, right? And then it never gets to your first order, and this market just explodes higher, goes to your target without you. And, you know, even though you found a great trade, you don't make any money. For those that, you know, the way we teach you, like, you can day trade this stuff, you know, you could be playing breakouts if you want to. So you could literally watch the markets and go to the lower time frames, like your 15-minute charts, and start to trade, you know, day trading style. And that kind of potentially gives you an edge. But, you know, I think personally, like for most people, it's just about finding enough trades, and you will get filled on enough to make a good return. So if we just take this as the last thing, I'm going to just plot the Fibonacci on the 4-hour time frame. I'll use the tool just to make it a bit easier for us. So that plots the current Fibonacci. I'll zoom in to the current AB. So here's the current AB. Let me show you it, because it's easier if I show you. AB C hasn't quite reached the 38.2, very, very close to it there. That's the 38.2. That's kind of where you'd expect. That's really where you'd want to be buying it as a minimum, but this is the ideal buy. And like I said before, if you can match it up, like here, there's a nice resistance point, right? That was also quite a decent support. And then a little bit lower, you can see this was a really nice resistance point. So this little zone here becomes a really nice, interesting zone where you can buy it. And then if you notice, the 4-hour target is a little bit lower. So you've got a target of 157.50. So if you wanted to go for something smaller, that would be your kind of target there. So your R to R will be lower on a 4-hour chart, your reward to risk. However, the time it takes for it to get there is going to be less. Plus, you know, there's less risk in terms of, you know, something happening. Now, whereby, you know, you catch a move and then your target's up here, and then the market, you know, reverses and comes back to your entry, for example. So there's less time for anything to affect you. So as we know, on Thursday there's news. Now imagine the scenario, guys, like this market doesn't do anything and you're just still here. You know, in that case, what would I be doing? I'd be looking to put an order in at my favored price. So the minimum would be this third red line, the 618. That would be so either there or lower, basically, because you can use the volatility in the news to basically get your price and then hope that there's an overreaction to the news and then the market just bounces up. Okay, because the market will generally go where it's supposed to go, no matter what the news. And often the news is just a noise that can allow you to get into the trade at the best possible price. And that pretty much completes the setup for today.
Awesome work, sir. So that is our weekly Pips Like a Pro trade setup of the week with Mr. Andy Demi, where we just taken 15 minutes of your time to go through the charts live. And we found not one, but two low risk, high probability setups, Obviously, they are kind of dependent upon the news. That was the whole reason why we've picked them out. If it doesn't make total sense to you, then the beauty of this is that it will be replayed. So Facebook user, please log into the StreamYard link so that we can see your name and your photo, like Anita, who's also logging in live on Facebook. And then we know who we're speaking to. But yes, to answer your question, it will be replayed. Check out our YouTube channel to get the replay in probably about an hour or 2 hours time. We'll have it up for you, and then you can just re-go over that and really start to kind of dig deep and hone in your skills.